Hello and Assalamualaikum to Madam Ruziah and to all my friends. Today, me and my group members, Nur Nadira, Shazwina, Nurul Ain and Siti Hawa will be presenting about the case study of Russian financial crisis in 2014, the Central Bank of Russia. During 1860, the Emperor of Russia, Alexander II, signed a decree to establish the state bank. This was the beginning of the history of the Bank of Russia. Initially, the state bank was mainly engaged in short-term commercial lending. Alexander von Stiglitz became the first governor of the bank. The Russian Republic established the Central Bank of Russia in July 1990, led by George Matyukin. The Russian authorities transformed a branch of the State Bank of the USSR, which is the Goose Bank, into the Central Bank of Russia in an attempt to gain local control over Russian monetary and banking affairs. The bank played an important role in rebuilding the state financial system and trading evolution. During the hardship in World War I and the Great Patriotic War, it focused on covering military expenditure and the supply of the army and household with money. In the Soviet Union, the state bank was a lender for the centrally planned economy, issued money, and carried out international settlements. In July 1993, the problems of the ruble area led Russia to introduce the Russian ruble and demonetize the pre-1993 rubles. This marked the end of the ruble area and the beginning of Russia's full monetary independence. The Central Bank of Russia also made all its lending more expensive by making the interbank lending rate as its lending rates. This encouraged banks to rely on the central banks only as a lender of last resort, thus virtually eliminating their overdraft with the central bank.
We are going to continue with the media story on financial problems. There are two media stories that we chose, which is The Guardian and CNBC, or also known as Consumer News and Business Channel. Both of media sources that we chose is based on central bank in assisting its interest rate. However, the timeline for both resources is held differently, as the first media story is in 2014 and the second media story is in 2015. The first media story is Russia's central bank increases the interest rate from 6.5% to 17% in effort to stop the ruble collapse on foreign exchange market. According to the bank, the rise in borrowing costs was necessary to stop the depreciation on currency and to fight the inflation from increasing. This is because if this problem continues for a longer time and there is no measure taken, it will affect the Russia recession anytime soon. On top of that, most of investors sold their stock as they considered the possibility of Russia economy will continue to collapse, making it more challenging for the West to deal with escalating geopolitical tension in Western Europe and the Middle East. Next, the second media story is the Russian central bank reduced its benchmark interest rate in 2015 in an effort to boost the nation economy. This specific measure has been taken to sustain the risk of significant economic cooling and lower inflation risk. An increase of interest rate to 17% in previous years is one of the efforts to face the major inflation brought by the depreciation of the ruble. On the other hand, many investors sold their currency after economic sanctions were placed on Russia due to the revolution of Ukraine and the annexation of Crimea, causing the value of the ruble to drop by 0.5% compared to the dollar in the 2014. On top of that, Russia has a weak economic development, which is concerning to the central bank due to its separation from the rest of the world as a result of economic sanction, which also leads to a reduce in economy oil price. We can see that Russia gross domestic product (GDP) fell in April compared to the same month on the previous year, which leaves more room for the government to consider a lower rate as a result of slower growth in an effort to encourage the consumer and company borrowing and expenditure to increase their GDP.
Financial risk abounds and comes in a variety of shapes and sizes, impacting practically everyone. Knowing the hazards as well as know how to defend yourself will not remove the risk, but it will lower the severity of the injury and the likelihood of a poor outcome. Credit risk, liquidity risk, and operational risk are some of the most prevalent and different financial hazards. Market risk refers to the risk of changing market circumstances in the specific marketplace in which a firm competes for customers. Consumers' rising proclivity to purchase online is one indicator of economic risk. There are two main consequences of the 2014 to 2015 Russian financial crisis. The first one is Russia's inability to postpone an exchange rate adjustment for its national currency. The second one demonstrated a lack of ability to deflect adjustment costs, as seen by the severity of the 2014 to 2015 crisis as well as the unpredictability of the adjustment process that followed the rubble's fall. Credit risk is the risk that businesses make when they issue a credit to clients. It may also relate to the company's credit risk with its supplier. Due to high price of domestic credit, Russian firms and banks were forced to seek alternative loans in Western wholesale financial markets. Asset liquidity refers to the ease with which a corporation may convert its asset into cash in the event of an unexpected significant requirement for additional cash flow. Lawsuits, fraud risk, personal issues, and business model risk are all included in the operational risk category. A severe macroeconomic crisis developed, resulting in lower imports, lower living standards, and economic slump.
Thank you, Hawa. For the next part, I will be explaining about the strategies adopted by financial institution, which in our case is the Central Bank of Russia. So the first strategy is by ensuring the stability of national currency, which is ruble. Referring to Article number 3 of the Federal Law number 86 FZ of July 2002, on the Central Bank of the Russian Federation, the first goal of the activity is in fact the protection and provision for the ruble's stability. The next strategy is by enhancing the interest rate risk management. This is to maintain a bank's interest rate risk exposure within self-imposed parameters over a range of possible changes in interest rate. In this case, on 15 December 2014, the central bank spent almost $2 billion for Russia to be able to support the declining ruble. Next, on 16 December 2014, for the sixth attempt, the central bank has slowed down or stopped the declining ruble by increasing its key interest rate. The increasing of interest rate will reflect the country's currency to be more valuable. Other than that, enhanced credit risk management to prevent the unsustainable growth of unsecured consumer lending, the central bank has tightened provisioning standards and raised capital risk weights, which has improved banks' capability to control credit risk. And the last strategy is by implementing Russian anti-crisis policies. Due to the external sanction in financial sector and the falling prices of oil, the central bank has decided to implement the anti-crisis policies in late 2014 to 2015. And this policy is specially adapted to preserve and stabilize the financial system. And that's all from me. Let's continue with Shazwina Asila.
Thank you, Nur Ain. Now let's move to the conclusion. As the result of the sharp devaluation of Russia's currency that began in the second half of 2014, Russia experienced a financial crisis in 2014. Not only that, but Russia's financial crisis in 2014 also influenced by a conflict with Ukraine and its reliance on commodity prices such as oil and gas. This crisis has had an impact on the Russian economy, both consumers and businesses, and Putin's ambition for the Eurasian Economic Union. The Russian stock market also has seen significant decline, with the RTS index falling by 30%. Moving on to the recommendation. The first one is allocate liquidity at fixed rates on a full allotment basis. For example, central bank can extend the maturity of operations up to 1 year to provide banks with a more medium-term perspective in their liquidity planning. Second, maintain the policy rate at a low level for an extended period of time. This strategy is viewed as a complementary tool that could help to reduce uncertainty. That's all for Russia financial crisis in 2014. Thank you for watching. Assalamualaikum.